Hello there. Today I want to good start. Today I want to talk to you about when you're self-employed, how does taxes, CPP, and EI work? Because we know that like if we work for someone else, then taxes, CPP, EI, they all get deducted from our paychecks, and then we get remitted to the government for us, and then we get a T4, and it's super simple. But how does it work if we have self-employment income? So I'm talking specifically about sole proprietors. So you have not incorporated your company, you just make money on your own. You have your own small business. This could mean that you're working full-time in your business. It could mean that you're employed, but you have sort of a side hustle going. If you make any amount of money that's not through an employer, then this is for you. I'm talking to you. So for small business income, for self-employed income, you are responsible to pay income tax and CPP on this amount. You do not have to pay EI on your self-employment income, but you can opt into that program if you want to. And I normally recommend not to do that for self-employed people because it's really tough to prove that you qualify for EI. So it's normally just better to save that money and then like put it into a savings account or an investment or something like that instead. So you are exempt from EI if you don't want to opt into that program. But you do have to pay CPP and income tax on any money that you bring in. So you have your income, your like the amount that you've invoiced somebody, and then you've got expenses that you needed to pay in order to fulfill the contracts that you had or to fulfill the job that you sold. And then so your income minus all the expenses that you had is your income for tax purposes, basically. And so that amount goes on your income taxes and is taxable. You have to pay tax on that number. You also have to pay CPP on that number. Now, if you worked for somebody else, then you would have CPP deducted from your paycheck, and then your employer would match that amount. So it's 5.1%. And there's a $3,500 exemption, but I'm not going to go into the details of it. But so 5.1% that you would pay from your paycheck. If you're self-employed, you have to pay the employer's portion as well. So it ends up being 10.2%, which is, a significant amount. There is a cap on CPP, and every year it changes. So if you can only pay up to $2,898, I think it is, for 2020. So if you're employed and you make over, I think it's 55,000-ish, just less than 55,000, then you will already have maxed out your CPP with your employer, which means you won't have to pay CPP on the income or the self-employment income. You just owe the income tax. But if you're self-employed and that's your full-time job or that's your only source of income, you're going to have to pay CPP on that self-employment income. So that's actually the piece that gets small business owners at the end of the year. It's not that they have to pay a ton of money in taxes, it's that they actually have to pay a bunch of money in CPP, because taxes, your net income is adjusted for credits and different things that makes the income number actually lower than what you've made in your business. But the CPP doesn't have that same credit system. There's no deductions to CPP, you just owe it. So that's generally the biggest number for small business owners, is that CPP on self-employment income. So those are sort of the basics. That's what you need to know. You have to pay CPP, both the employees and employers portion of it, and you have to pay income tax on whatever it is you make. You are exempt from EI on the self-employment business side. If you're employed by someone else, you still have to pay EI on that income, but you don't on your self-employment income. If you have any questions for me about that, definitely leave them in the comments and I would be happy to answer them. If you want tips like this sent to you every week, then sign up for my newsletter. I've left a link in the description. I hope you're doing well, and I'll see you tomorrow.